Happy New Year, everyone. It's Imran Larker from Options Insight, back with another episode, the first episode of 2026 of Crypto Options Unplugged. Now, I don't have my usual partner in crime today, David Brickell, but instead, I've got a good friend of mine, Amar Patel, who is an independent crypto trader, and we're going to talk a little bit about his journey into crypto and how he looks at the market and how he does what he does. Welcome, Amar.
Thank you very much. Good to be here, Imran.
Yeah, good to see you, man. So before we start, why don't we get a little bit into your background? You were obviously a TradFi as well, like myself.
Yeah.
A little bit about, you know, the early parts of your trading career.
Well, I mean, it depends on where you want to start, but I mean, the journey really began in Lehman times.
So started at a funny time.
Exactly. That's why, it took a long time to stop being so bearish, right? But I joined the graduate program in 2008 on equity derivatives. Shortly after Lehman went bankrupt, joined Nomura, and basically been trading equity derivatives for the best part of 10 to 15 years until around 2020.
Mm-hmm. You worked with my brother, didn't you?
Correct. That's how we met. I did a short stint at Schroders, running their sort of call overwriting program for one of their funds. Mm-hmm. And Shazad was there, and that's how we got to meet shortly after. And then I think you interviewed me as well, didn't you?
That's right.
At Citi.
For a single stock. Interview. And you find yourself in Dubai now, so you've come back down to London for a bit. So
yeah.
So what was that?
Yeah.
What's that move all about?
I mean, I had a COVID wedding in 2021, and it got to that point where I started questioning, okay, I'm 36 years old now. If I don't make a move now, then I'll probably spend the rest of my life in London. And, it's a big wide world out there. There's other opportunities. So we just bought a house in London. I just got a job offer from Bloomberg to run their specialist equity derivative sales. That was the role. And a friend of mine asked me to partner up with him in a venture fund. And it didn't require me to be anywhere particularly, but he was based out in Dubai. Mm-hmm. And conversations started happening. I was like, why don't you just come out and check it out and see what it's like? Mm-hmm. And I told my wife. She thought, I was smoking something, I don't know. She's like, let me entertain him for about a month. Be a nice holiday, spend January out there. Mm. And so we went. And during that time, I told her, why don't you take it a little bit seriously? Right? Like at least, pretend as if this is actually happening. Mm-hmm. So she did. She got in touch with a recruiter. Mm-hmm. And
what does she do?
She's a lawyer.
Okay.
She ended up getting a job there and then.
Oh,
after
wow.
three interviews while we were in Dubai. And as soon as she got the call, she
felt a bit different to London, I'm sure.
Oh, totally. And as soon as she got the call, she burst out crying, realized that, okay, it's happening. We're moving because, her getting a lawyer's job made the whole process easy. Me being a cavalier guy, having a venture crypto fund didn't really mean anything, right? Like,
a lot of uncertainty.
Exactly, a lot of uncertainty, and so that basically meant that as soon as we got back, we completed on our house on that day, which we were going to move into. So we we put it on rent, and right. I told Bloomberg, who I was going to join the week after a 3-month gardening leave. Sorry, guys, I'm not turning up next week. That didn't go down very well because they spent a lot of time looking for someone for that role. Okay. Sorry, guys. And 3 months later, we moved to Dubai.
Nice.
And we've been there now for 3.5 years.
And it's a very crypto-friendly place now, Dubai, right? It seems a lot of like Deribit's got their headquarters over there now. Having been there for a while, like, have you seen... do you see a lot of crypto in your face over there? Like, is it very clear that they are driving like a crypto economy, or is it a little bit more subtle than that?
It's quite subtle. I mean, you get a lot of advertisements talking about crypto,
okay,
but it's not like you can go to different places and pay with crypto all the time, right? Like, there's a lot of startups, there's a lot of entrepreneurs there, there's a lot of people like me who independently trade. Mm-hmm. But you have to go out of your way to find that. It's not like it's just easily available.
So rather than pushing it so much, they're just very accepting of it.
Correct.
Right.
Correct.
And they're friendly in that the tax rate is next to nothing, I guess, right?
Exactly. I mean, they're promoting crypto companies to set up. They've got rules and regulations to allow, people to experiment with RWAs, for example. So tokenizing real estate is a big thing out there, right? To basically buy property with Bitcoin or fractionalize a property.
Interesting.
So that people can get involved and invest in real estate over there. There's loads of different things like that.
It makes sense because I think the real estate's probably not cheap over there. So making it fractional probably makes it more accessible to a lot of people, right?
Correct. And yeah, I mean, people look at property as a investment asset class, right? But you need a fair amount of money to buy a property.
Yeah.
So if you can buy it with $1,000, then, it's something, right? So there's all sorts of use cases for crypto, of course. And places like Dubai try and encourage that, right? So, there's credit cards that you can spend your USDC or USDT on, which, are available through an app that you can spend money on, right?
Yeah, and it's true. The stables are the things that you're probably comfortable spending on a credit card, not your actual Bitcoin. Or
Exactly.
Whatever, right?
Yeah, exactly.
Because you're holding that for a different reason.
You're not going to spend a meme coin on like buying a PlayStation or something like that, right? Because one day you can afford it, one day you can't, right? It's the USDT, USDC, all of those tokens that you can use.
Okay.
You don't need to off-ramp it into your bank account and then spend it. You can keep it in case,
It's removing the friction.
Correct.
Right?
Correct.
Yeah. All right, cool. So that's Dubai. Let's talk a little bit about when you first got into crypto, because you weren't that early. Like, and we've had people on the show who got in like, 2014, 15 or whatever, when it was really cheap, right? You got involved in 2020.
Yeah,
right?
Yeah. I mean, there's a little backstory to that. A friend of mine told me about it in December 2017. So I did buy a small amount in 2018.
Okay.
Got absolutely hosed on that and didn't want to touch it.
I think we all did with a really token amount back then. Right?
Yeah, when the headlines were going, Bitcoin was at 20K. I think I'm missing out on something. So let's buy some altcoin.
Well, I think we all waited for the dip to like 15, bought it there and watched it go down to like 5.
Exactly.
Yeah.
Exactly. And there was all these white papers out then thinking that, if you read a white paper, that means that you're educated in this token. That means that, it's going to change the world. Let's buy it. And that's what the game was back then. But of course, crypto corrected massively. And in 2019, I came across Bitcoin Standard.
The book.
Yeah, by Saifedean Ammous. And I've been a gold bug for a long period. In 2011, 2010, when I
Are you still a gold bug?
Yes.
Okay.
Although I sold most of my gold in about 4,000 in my pension about 3-4 months ago. But look, I've been a gold bug for a long time, so I understand the properties that
make it good.
That make it really
store
good.
Of value.
Exactly. And the Bitcoin Standard, it was like a blue pill moment where I was like, okay, it is so obvious that this is relevant in this world, given the money printing, given everything that's going on, the debasement,
the anti-fiat properties of it,
the insurance element of it. And I also, would spend a lot of time reading Taleb's books, Skin in the Game, Anti-Fragile, the idea of being exposed to something with huge amount of potential upside and limited downside, right? You can't predict whether things are going to go up or down, but you can expose yourself to things that have
asymmetry,
right?
Yeah.
And Bitcoin ticked all of those boxes. But I didn't have that much money at that time due to, stupid decisions on myself, right? Like lending money to family and things like that, right?
So was it like, was the decision to invest in Bitcoin, was it like mainly a financial opportunity, or was it like a philosophical, this is like the answer to the fact that monetary system's broken? Because we had Joe Bryan come on this show like couple of months ago.
It's fantastic.
Amazing video that he put out there called
I've seen it,
What's the Problem? So make sure you guys watch that. And our conversation with him was great as well. But like, from your perspective, was it like, okay, this is just a great asymmetric opportunity to make money, or was it more than that for you?
Yeah, it was an ideology at that time. Right?
Okay.
I really needed something to believe in as well personally at that time, because, it was COVID.
We all did, I guess.
Yeah, exactly. Yeah. I didn't have a job, didn't have much prospects. I was getting married. I was like, okay, I need something to believe in. Give me something, God. Like, okay. But the Bitcoin answered a lot of those properties, right? It solved for, profligate government spending. It solved for, a requirement for hard money for people to store their wealth in, right? To save money on, right? All of these types of ideas, Bitcoin matched. And then, on that day in 2020, where, you had a 50% correction in crypto due to, a huge amount of deleveraging on BitMEX. I mean, look, I had no idea about a lot of this stuff, but Coinbase was the only way that I got involved in crypto. And I had some money on there. I was up at 2 a.m. in the morning,
So you'd already kind of said, I want to buy this thing on a dip.
Correct.
And then you got a dip. And
Exactly.
you're like, right, I'm ready to go. Let's go.
I was prepared.
Okay.
And in fact,
so that helps, having that preparation. So you didn't have to make the decision in the moment. You'd already said, I want to stick some money in this thing. I'm going to wait for an opportunity for an entry, basically. Right?
Exactly. I mean, the number of times over the last 5 years I've made money on just being prepared, having the right wallet in the right sort of chain with money there ready, or in the right exchange, or in the right place at the right time, it's been a game changer.
Oh,
and
interesting.
that first time,
Because I don't think a lot of people do that sort of preparation, right? If they put it on an exchange, the chances are they're going to spend it then. They're not going to be just like parking money on an exchange waiting for the entry.
No,
right?
exactly. You would basically, okay, price has gone down. Okay, let me get my bank to wire it to there. And back then, it wasn't
2-3 day delay.
Exactly.
Prices bounce by then. You've missed your opportunity.
Exactly.
Right.
So I had that money parked in there for 3 months, I'd say. And Coinbase notification turns on, says crypto's down 50%. And I had absolutely no
50
idea.
in a day, right?
50% in a day, right?
Yeah,
It went from 6,700 to
Crypto loves to do that.
3,400. I mean, not often, right? Like, I mean, obviously.
It's becoming less frequent now.
Correct. I mean, we can talk about 10th of October as well recently, but,
nowadays a 10% feels like a 50.
Exactly.
Yeah.
And I got my opportunity,
Piled a load of money in at the lows on that day.
Piled a load
around
of money.
3-4K.
3.5K was my
3.5K.
average fill.
Wow.
And
So that was just Bitcoin you invested
just
in?
Bitcoin, and that was my first entry and my only entry ever into crypto.
Your only entry?
So I've never actually bought more crypto.
So you never get more fiat and bought more crypto?
I've never gone
So whatever you've made from that original Bitcoin purchase, you've shifted into stable or another coin and continued to build.
I've never been a buy and hold guy, right? And that's been positives.
That's interesting because, like, Raoul Pal, the guy who kind of got us both into crypto,
exactly. Yeah.
He's very much a buy and hold guy.
Correct.
Right?
Correct.
So tell us more about that mentality. Like, you say you're not a buy and hold. Why is that?
Yeah, I mean, because I've seen so many people get hosed with the idea of holding on to something that's as volatile as it is, because risk management and things like that just go completely out of the window. You don't have invalidations. You tell yourself a narrative saying that, okay, it's only gone down 20% from here. I'm just going to hold. Oh, it's gone down another 10, 20% from here. So the main reason is I thought that I could combine my trading experience to crypto. And by doing that, I didn't need to be constantly holding on to a particular asset thinking that it's going to go well. Now, in 2020 and 2021, that would have been the best thing to have done.
Just hold.
Buy and hold. I mean, there's a number of people that I know who absolutely crushed it, right? Like millions of dollars, right? Now, what they don't say is they're the same people that also drew down 60 to 70%.
Yeah.
Right?
In 22.
In 22, right?
Yeah.
I didn't make anywhere near as much, but my drawdown was 20% in 22, right?
Right.
So it's
It's a risk tolerance thing.
It's a risk tolerance thing. And it's also transitioning from TradFi to crypto, and to deal with the high octane volatility, it takes some getting used to, right? So, there has to be a trading style shift. There has to be all these types of ideas that you have to take on board, and you have to, understand what type of asset class you're trading, right?
Did you use leverage?
Yeah, loads.
Okay.
Yeah, I mean,
talk about that, because
Yeah.
we often guide people, and we'll still guide people on this show, say, you know, don't use leverage, invest what you can afford to lose, because we don't want people to blow up their accounts, right? But being someone who very much has used leverage, why don't you give us a little bit of a roadmap or a framework? Like, how can you use leverage safely and keep yourself out of trouble?
Okay, so after I bought this Bitcoin, I started investigating what the different types of products the exchanges offer, like perpetual futures, right? So Binance offers perpetual
As
futures.
the Deribit.
Exactly.
Yeah.
So you didn't need to just invest spot, right? You could, buy futures and get exposed to the same.
And you could buy a larger amount of futures compared to your pot, basically.
Correct. So say you've got you got 100 grand, right?
Yeah.
You can get yourself exposed to $1 million worth of tokens.
Which is 10x leverage.
Exactly. Now, what that means is that if the price goes down by 10%,
You're wiped.
Zero.
You're wiped
You
out.
can't come back from that, right?
Yeah.
So, leverage is a double-edged sword, right? You can double your money, obviously, with a 10% move in that scenario. Now, once I sort of, discovered this perpetual futures, and once I realized that this altcoin market has a huge amount of opportunity to make more Bitcoin, right? Rather than just trading Bitcoin on leverage, I could trade altcoins on leverage. Now, there was...
And the reason was they were higher volatility.
Exactly. They were high volatility and they were uncorrelated to what Bitcoin was doing.
Okay.
So in 2020, there was a huge amount of time where Bitcoin dominance was constantly going higher. So if you remember the move...
And that means Bitcoin's going up and altcoins are generally underperforming.
Yeah.
Yeah.
So if you remember the move from sort of basically 5K to 40K, that happened from March 2020 to around Jan 21. And that was a huge Bitcoin dominance led rally.
Yeah.
And during that time, that's when me and you started talking about ideas. And I still remember to this day, we both put on Deribit.
ETH calls.
We did the call switch.
So then I just covered the Bitcoin leg.
Yeah, me too. Obviously, right?
So the call, that's right. The call switch we did is we were looking at it saying we think ETH's got a massive catch up basically.
Yeah.
Because Bitcoin's led the rally.
It was the same vol.
And the volatility differential wasn't very big. So we bought Ethereum calls out of the money, quite far out of the money, like 100% out of the money.
We bought $1,000 calls on ETH.
Yeah, and it was trading at like 500.
500, yeah.
Yeah, and then we sold whatever calls we needed.
We sold the 25Ks and the 30K Bitcoin calls.
Is that right?
Yeah.
Okay, I don't remember the structure.
Yeah.
But the idea was to not spend any premium,
Exactly.
but have this exposure to an ETH catch-up trade,
Correct.
basically.
Correct.
Yeah.
And so we put that on. We did that in decent. I did that in decent size, and the Bitcoin went through the strike, and Ethereum was not doing anything. And then on Christmas Day,
we started to doubt our thesis.
Yeah, we
right?
were really doubting. And then I remember on Christmas Day or Christmas week, Ethereum just did that move, $500 to $1,000 rapidly. Right?
Yeah, that's right. Yeah.
And so that paid off significantly.
But it's funny, as our thesis was starting to look a bit hairy, rather than just unwind the whole trade, what I did was I just started shaving down the size of my short Bitcoin calls. I was just like, I still think this Ethereum comes good, but if Bitcoin just keeps going and costing me money, I don't like that.
Yeah.
If I'm net bullish crypto overall, why don't I just cover those calls, right? So that's what I started to do.
Yeah, and that's risk management at the end of the day. People sometimes say, okay, look, don't bottle it when it's going against you.
Yeah.
But I think the one thing that's kept me in this game where there's loads of people that have gone out is I've avoided a big loss.
Yeah.
I've always taken a small loss. I've always taken a small win. I've taken a big win, but that big loss has never happened. And it sounds like it's the same with you, right?
Yeah.
And
you definitely leave money on the table, but you stay alive.
You stay alive.
Yeah. But tell us more about this kind of using perpetual futures for leverage.
Sure.
And how you've managed to stay alive doing that.
Sure. So
because I know a lot of people who haven't.
So
right?
number one, I always use a stop loss.
Okay.
Right? I always manage the sizing such that if I do get hit with the stop, I don't get wicked out.
Is your stop loss like a reflection of the volatility of the asset?
Correct. Yeah.
Okay.
So it's always based on ATR, right?
Average true range.
Correct.
Okay.
So and technical analysis. So side story. I spent a significant amount of time learning Fibonacci and just understanding how technicals work. And I became a big believer of technical analysis in 2020.
It's interesting. A lot of institutional guys don't believe in technical analysis.
Yeah.
They think it's just a load of rubbish, like a load of squiggles on the chart, and you can draw you can make it look like anything you want, right?
Yeah.
And I, I wasn't a massive believer for probably the first 5 years, maybe even 8 years of my trading career, my institutional trading career. I wasn't big into it either. But then I met a guy who's a bit of a technical analysis wizard, guru, and it was like he had this ability to just call the market so well using his analysis. I was like, how are you doing this? And he's like, I look at technicals, but the value add that he had in his technical analysis was like, it's that, the way he sort of described it was charts are just human psychology on a screen, okay? And human psychology works in waves, right? And if you can identify the kind of waves that we are in, you have a much better chance of like enhancing your entry and exit into an asset, basically, right? And it was really mainly that, and like a little bit like he could gauge when sentiment was really overcooked one way or another via whatever analysis he did, and looking at the wave structure, and that just started to yield really good results, right? It wasn't the only thing that I used. I mean, funnily enough, it was the only thing he used. He didn't care about news flow, fundamentals, anything. He just looked at the charts. I like to encompass everything in my toolkit. But that did change the game for me, and I definitely saw the value of it. But tell us about your technical analysis eye-opening journey.
Yeah, I mean, I totally agree, right? Like, for me, technical analysis, having traded in institutions like you, you'd laugh at these guys, right? Like, what are they? And another thing, my dad, who's basically traded himself since 1995, every day turns up and punts a few ES mini futures on market open to this day. Still to this day.
That's hilarious.
A legend, right? But he's the one that effectively got me into trading, right? Like I saw his charts.
What age did you start trading?
I mean, I got an internship at
but like what age if your dad was into it that much, like what age did he get you into the idea of it?
I mean, I saw what he was doing. I was never interested until internships started becoming a thing in university, and I saw someone's, there's a trading internship. I was like, oh, I know what that is. My dad does, so let me ask him about it.
Okay.
So I see all these charts and I understand it. But because of the fact that my dad always relied on technical analysis, I never took it seriously.
No, okay.
Yeah, I was like, okay, my dad's doing it, so it can't be real, right? So like, okay, sorry, Dad. But, it's like, I would just laugh. I was like, Dad, you don't know what you're talking about, right? It's kind of a father-son kind of thing. That,
it's interesting.
You don't know what you're doing, right? And come 2018, December 2018, and I'm running a proprietary book at a Russian hedge fund.
Yeah.
And, was significantly, in the shit because, we're hugely short gamma, S&P's been correcting due to taper tantrum fears. And if you remember December 2018, it's a very volatile period.
Yeah.
I would call my dad every day to give me key levels at which you think that there'll be pivot points.
Okay.
And because of that, for about a month, I was doing that. It saved my book. I kid you not. I saved my book. I was like, oh my God, maybe my dad is an actual legend, right? Genuinely. I was trading millions and millions of dollars of notional, right, every day based on my dad's woohoo charts.
Oh my gosh.
Yeah. So.
And he was using fibs, was he?
Fibs.
Okay. Yeah. I mean, I think it's hard to deny that there's some value in fibs. I use fibs. I use fib confluence.
Yeah.
So you do multiple fibs and where they overlap.
Time frames.
Right?
Yes.
Yeah, exactly.
Different time frames, and he was using pivot points, right? And this is like a big thing now in trading community, by the way. But that's what he was doing, and I was like, how do you know that it was this level that it was going to get to?
And they say it's a bit self-fulfilling as well. The more people that look at it, the more relevant the levels become.
Exactly.
And I agree with that.
Yeah.
There is some of that for sure. Right.
But like with Fibonacci levels, you can provide clear invalidations as well as clear profit targets. It really tightened up your risk management.
Okay.
Right? And so in 2020, when I was trying to take this a little bit more seriously, I found a random dude on the internet and I took a course with him about learning how to do Fibonacci level properly, right? Like in all sorts of different shapes and sizes. And it was one of the best value add courses I'd ever done, right?
How did you, I mean, that's an interesting one. So like, there's millions of courses out there on the internet. How did you know this guy was legit?
It was a guy that my dad was following.
Ah, okay.
he was just randomly following him.
From experience?
From TradingView.
Okay.
And he obviously he had a course to sell. I was like, okay, I got in touch with him.
Yeah.
Like teach me fibs, right? And you know, he had some level of accuracy in some of his calls before. So I was like, okay, I want to do this.
Yeah.
So
Yeah, and the reality is, like, people think that if you're selling courses, it must be a scam, and like if your course doesn't like isn't if your approach isn't right 100% of the time, then you're full of it, right?
No.
But what they don't seem to understand is that the success in trading isn't about being right 100% of the time. Even if you're right like 60% of the time or 50, but you know how to manage risk and you know how to create asymmetry in your book, that's how you make money.
exactly,
Right?
exactly. Mindset, psychology is a significant part of that battle, right? Like there are so many people online that have so much to offer. I mean, Twitter's changed my life, right? Financially, for sure, right? Because
Yeah.
of the number of people that you come across that seem to know what they're doing,
Yeah, and they're sharing loads of information
sharing
for free.
loads of interesting information for free.
Yeah.
Don't lean away from that. Obviously, curate it. It's easy to go the other direction and just follow absolutely everyone.
And a lot of people spout a lot of crap as well, right?
Exactly.
I mean, you know, one thing that, you know, I can't say I know for sure, but there's a lot of stuff right now in the Twitter sphere about silver,
Yeah.
right? Silver's gone parabolic, okay? And whenever silver does something like this, all of the silver bugs and the conspiracy theorists come out saying the banks are short silver and they're getting squeezed and they're losing billions and all of this stuff, right? I don't know that there's any concrete evidence of that, right? And you know, there's people on Twitter saying it's true. There's people calling BS on it. I don't know, but like, you've got to be a grown up, and you've got to like make your own judgment on like what you believe, right? Because there is fake news out. There's always going to be fake news out there, or there's going to be like arguments out there that aren't quite 100% accurate, and they might be missing a few details or whatever it is. But the point isn't like everyone you follow has to be, you know, 100% like every single thing they say is like gospel.
Yeah.
It's a bunch of information, and it's your job to filter that information and decide what you want to take from it, right?
Everything is probabilities. Everything, right? Like whether
Yeah.
the market goes up, goes down tomorrow, no one knows. There's a probability assigned to it.
Yeah.
If there's a 10% probability the market goes up tomorrow and it goes up, that doesn't mean that you're wrong, right? It means that 10% chance happened, right?
Yeah.
So just because of that, right? Like every type of view that you have is just a view.
Yeah.
You can be wrong on that view, you can be right on that view.
Yeah.
If you structure the trade well,
Yeah.
it means that 9 times out of 10, you'll make money on that.
Yeah, because trading's not about predicting the future. It's
No.
about navigating the chaos.
Correct.
Right? There's the random walk that is the market
Yep.
is gonna do stuff, and if you know how to navigate that to create positive P&L from it, that's the game. The game isn't predicting every squiggle.
Exactly.
Right?
Every single person that participates in the market has a very unique journey that they themselves are going through, right? And it's up to them to try and make some money out of that. So coming back to, for example, technical analysis and perps trading and leverage, right? All of these types of ideas like allow you to absolutely crush it when you're right and minimize damage when you're wrong, right? So for example, you know, if you're basically getting long Bitcoin, right? My technical analysis tells me that on the 38.2% retracement, I should keep my stop there. And that ties in with the kind of local low before that. What is that distance between those two price points? Is it 5%? Okay, 5%, let's say, right? My target is, okay, the all-time high, right? It's 20% away. That's 1 to 4, 4 to 1 ratio.
Yeah.
Now that one, how much do I want to lose on that, right?
Yeah, that's your risk unit.
Yeah, exactly. So if it's 5%, if I'm willing to lose 10% of my portfolio for argument's sake, right? That's 2x leveraged, right? So I got put on a 2x leveraged position. I've got my stop 5% away, right? And if that stop hits, I've lost 10% of my portfolio.
10%, okay.
Now, in this scenario, whether
That's a punchy amount to risk, right? 10%.
Correct. I mean, it's a purely example. I mean, I wouldn't recommend someone losing 10% on one trade.
One trade,
for sure.
Yeah.
Right. That's
a very high level of risk tolerance.
correct.
Right?
Correct.
Yeah,
I mean, so to give you just some sort of ideas of what I take as per trade.
Yeah.
Usually it's between 1% and 2% on risk.
That's pretty manageable.
Yeah, exactly.
Yeah.
And
are you always looking for 4-to-1s, or are you sometimes taking 2-to-1s?
2-to-1s, 1-to-1 sometimes.
Even 1-to-1s?
Yeah. Okay. I mean, you try and clearly define.
So what will determine whether you go for a 1-to-1 or a 4-to-1?
Okay, so I mean, usually you can create random targets, whatever that might be, right? For me, usually around the 1-to-1 to 2-to-1, I'll take some P&L off, no matter what, to make that trade free.
Yeah. Is that on shorter time frames usually?
Yeah, usually on 1 hour and 4 hour time frame.
Okay, so that's day trading.
Day trading, but not really, because you can have trades that go on for a week on a 4 hour time frame for sure.
Yeah,
loads
true.
of times, right?
True. Yeah.
So,
but in general, your smaller risk rewards tend to be on the shorter time frames.
No, on general.
Okay.
On general, when you're doing a short time frame, you can have your invalidation much tighter.
Oh, okay.
Because if you're doing it on a, let's say, argument's sake, 5-minute chart, right? Your invalidations can be 0.2% away.
Okay.
Right.
But I feel like that's just noise, though.
That's hypothetical. I don't trade on 5 minutes, but if you were to really go onto the shortest time frame, your invalidation can be much tighter.
Okay.
If you were doing it on a daily time frame, your invalidation is going to be much wider.
Yeah.
So you can't put more leverage on, right?
Yeah.
So the whole reason to go on shorter time frames is so you can trade leverage. Now, where I've done really well is where I've gone from a shorter time frame trade and converted it to a longer time frame trade.
Okay.
And what that effectively means is doing trend following, right? So if a position has gone in your side, your favor, and you put on a trade where it's got 1% invalidation and you've gone 3x levered on it, right? You've got a 3% risk.
Yeah.
And that position's gone significantly in your favor.
Yeah. Significantly by how much?
Maybe 5%, right?
Okay.
You move your stops to break even and it keeps going. And that's what crypto does invariably.
So rather than having your profit target where it originally was, you bring your stop to break even to where you entered, and you just completely remove your take profit and you just let it run?
I take a little bit off and let it run.
Okay. But like, what creates that decision to do that? Because a lot of the time you're just going to let the profit target get hit. So something has to have changed to make you think, actually, this isn't just a quick hit and run. This is an opportunity to run a winner for a long time. Yeah,
I mean, it's sentiment a lot of the time. It's the group chats that I'm involved in. If people are talking about a particular token, if it's becoming a narrative, right?
Just like a momentum, but not just momentum of price, but momentum of narrative.
Momentum of narrative, right? So if you're plugged into the Twitter sphere, right, and people are talking about it now a lot more, and you're seeing price reflecting that. You're seeing crypto banter showing, these tokens.
Shout out to Ran.
Exactly.
Yeah.
You've got all of these types of people starting to talk about it, and you are heavily positioned.
Yeah.
You want to go.
And then do you use AI at all to filter for that sentiment, like in the Twitter sphere or wherever it is? Like, do you use those tools to like get a gauge of that?
AI is only really come into
that's true,
high use this year, right?
Yeah, true.
When crypto was really going for it in 2024, in 2023, it wasn't really that much, but it was more, curated Twitter lists, highly useful, right? Having a Twitter blocker to make sure you limit your time for 10 minutes or 15 minutes, highly useful, right? These types of tools that can protect you, especially as well, a trading view as well, like having a blocker, so you don't just constantly glue yourself at charts, checking prices at midnight.
So what do you mean having a blocker? Like,
so like it prevents you from opening the app.
Oh, really?
Yeah, so you manage these addictions.
So you're forced to be discerning about when you spend time on the app.
You're intentional, right? Instead of like just mindlessly scrolling, right?
Because then you might just do trades that you shouldn't have bothered doing.
Exactly, and that happens so often, right?
I've never blocked myself on any of these apps.
I've blocked myself so many times.
Really?
I mean,
is that because you've got an addictive personality though?
I do have an addictive personality, but so does. I mean, I think everyone has an addictive personality to a certain extent. It depends on what matters to them, right? If you have a lot of wealth, riding on certain things, you'll be checking your phone 10 times overnight, right?
Yeah.
And destroying your sleep and maybe trading in the middle of the night. So how do you protect yourself from all these bad things, right?
It's a good tip. Good tip, people.
Sleep with your phone in another room, right?
Oh, that's a big one. I definitely do. Yeah.
So I mean, like, there's loads of ways to.
So we've talked a lot about technicals.
Yeah.
And you obviously lean on them a lot. When we were in the institutional game as market makers, it was a lot about understanding the positioning of the street in terms of trying to predict or kind of get an idea of where the flows were coming from, and that was going to drive short-term moves. Do you think that's particularly relevant in crypto? Do you use that at all or not really?
It's an interesting point. I mean, the whole time while we were, so I was on a single stocks desk, you were, I believe, on index. And in single stocks, you're generally always long gamma.
Which means you want the market to move.
Exactly. You want the market to move. And if the market goes up, you get longer. If the market goes down, you get shorter. And that means you need to cover your risk, right? So invariably, that means selling the highs and buying the lows as much as possible. And whenever you do that, you kind of consolidate a habit of looking for highs and looking for lows, right? Now,
so you're like a mean reversion hunter.
Exactly. You enjoy mean reversion, right? And you don't like it when things are trending, right? Because if they're trending, you're constantly selling higher and higher and higher, and your trading P&L is really, really bad, right?
Yeah, because you're better off just sitting on your hands doing nothing.
Exactly. But now,
which is hard to do.
Which is very hard to do, especially in a bank, because you can't leave overnight delta often, right?
You might have limits on that.
You have to hedge regularly, right? So you're incentivized to lock in P&L regularly. And so this kind of behavior, which you've regularly practiced for 15 years, needs to be unlearned. And
as a retail trader, because you want to catch the trend.
Correct. As a retail trader, you can't be, trying to make 1%, 2% every.
But because your starting capital is much smaller.
You're starting, and for it to mean something, you need to figure out how to stay in the game enough so that you catch a home run, or you catch a few home runs regularly, right? And to do that, you need to adopt a different approach.
And when you say a home run, what, like a 10x on risk type thing?
Yeah, I mean, like, to make your account grow meaningfully, right?
Yeah.
So that it's worthwhile you doing this, depending on, people start in different places, right? If you've got a 5-figure portfolio and you want to get to 6 figures, how do you do that, right? If you're making 1%, 2% regularly, well, I mean, in my worldview, you can't really do that because the market's always going to take some back from you all the time. So it's going to be a slow, steady process, and that's fine for you if you want to do that.
Yeah, but you're looking at maybe 20% in a good year.
Exactly.
Right? Which isn't, so it's going to take you a very long time to 10x that account.
Correct. And with crypto, you've got to lower your risk tolerance or increase your risk limits to a certain extent, be comfortable with having more of a whippier sort of portfolio evolution.
To P&L vol, you need to be more tolerant of P&L volatility.
Yeah, because you can't be stopping yourself out all the time. Obviously, you have all these...
interesting. And that allows you to be patient, right? Yes.
So one thing that, I had to adapt to is learning trend following. I never really believed in the idea of trend following. I thought it was stupid, right? I was like, why should something keep going higher and higher? It doesn't mean anything. Right?
Yeah, like exactly.
And then I see London property prices doing that exactly. I've seen so many other asset classes doing that, but I did not choose to look at that. But then I saw what Bitcoin did in 2018, and I was like, okay, there are some things that literally go, and the way to make money from this is trend following. Now, technical analysis has a number of great tools to allow you to ride a trend.
Ride or identify a trend?
Both.
Both, okay.
Right.
So like identify and then tell you when to enter it.
Yeah, both.
Right.
I mean, like, so, when Bollinger Bands are compressed significantly, right? It seems like if there's going to be a breakout, then, when the price goes above the upper band of the Bollinger Band, you can buy, i.e. buy high. Right,
yeah,
buy when the price
is counterintuitive.
Which is so counterintuitive to something that we've been taught. Like, why do I want to buy it higher when yesterday I could have bought it cheaper? It's like,
and getting your head around that's so difficult, right?
And like that was the biggest growth of mine, right? It was an ego thing.
I've actually incorporated, because I've got a mean reversion model that I use for like options. And you know, I look at when the spot is quite stretched using Bollinger Bands, funnily enough,
Yeah.
and that tells me if spot is too overbought or oversold. But again, if it's a breakout, then the mean reversion model is completely wrong, and we're just going to keep going. We're not overbought. We're about to fly,
Yep.
right? So I've incorporated some extra analysis that looks at the options market. That basically, when we're approaching overbought or oversold, how is the options market behaving? And is it giving me some signals to suggest mean reversion, or is it giving me signals to suggest a breakout? And what I've noticed, actually, that keeps me a lot safer when my mean reversion model's flashing. If the options market's saying stay out the bloody way, I stay out the way. And more often than not, we get a breakout.
I imagine that's something to do with term structure.
It's to do with like, you know, how the implied vol, how the fixed strike vol's moving,
Got it.
how the skew's moving, stuff like that, basically. But
Got it. Yeah,
it's quite cool.
It's so useful, right? Like when you're combining Bollinger Bands. So another thing that I do is use indicator called SuperTrend, right? And SuperTrend is basically a ATR calculation that it's like a moving average, right? But what this does is it keeps me in the position for as long as possible so that a trend can play out, right?
So is it like giving you a stop level, basically?
Exactly. So if it gives me a clear invalidation. So as price trades higher and trades significant, like for a period of time, super trends keep ratcheting higher, right?
Yeah.
And so if price breaks below it, I know that the trend's exhausted.
Some people might use like the 200-day moving average
Exactly.
for that, but you use this super trend thing.
I prefer super trend purely, it's purely a preference because it has a fixed level for an extended period of time instead of a constantly changing level with moving averages. So I don't have to constantly move my stops higher.
Okay.
That was something that, you know, was I don't use it that much nowadays.
Okay, but you have leaned on it before.
I've leaned on these types of ideas a lot, but it was that mindset change of buying high and letting things run. That was the biggest unlock to my trading style, especially for crypto. Like you had to try and understand what crypto was as an asset class, right? It was very momentum driven. It was narrative driven, retail
Not like
driven.
FX, for example.
Correct.
Right? Yeah.
Exactly. If you're trading FX, even if you're trading equities, right? Equities exhibits mean reversion so long. Now, crypto these days is very much mean reversion, right?
But probably because more instas have come into the game.
Exactly, and that's why I don't trade it anymore. I don't trade crypto that much these days.
So you've reduced your activity.
Yeah.
But you mentioned in the talk before that we had, you mentioned like automation.
Yeah.
Have you brought some automation into your trading?
Yeah.
what are you doing there?
So like screeners,
okay.
right? So like a lot of
So you still trade manually, but use a lot of screeners to kind of identify opportunities.
Exactly.
Okay.
Right. So like for example, I mean, I don't know if you've used things like Claude Code. These are like
Not personally, no.
It's game-changing tools now, right? Like these tools. I mean, there are things that I can do now that I could not do in a million years before, right? You can code up some highly, accurate and sophisticated things that even some institutions can use as well, right? If you really know what you're doing. So that, I mean, that's my direction of travel at the moment, is trying to figure out how I can incorporate as much automation as possible.
And are you gonna deploy that on crypto markets, or are you gonna deploy it on everything?
On anything that moves, right? Anything that exhibits some sort of a trend. Because look, one of the main reasons why we're in this space is to try and make money, right?
No doubt.
We're profit maximalists, right? We're not ideologists. And there's opportunities in every single
We
corner.
sympathize with the view that money's broken, no doubt.
Correct,
right?
correct.
But you're right. At the end of the day, like, this is a good point, actually, to your point. Like, if crypto gets disrupted by quantum computing, I still don't think I'm going to get wiped out.
No.
Because I'm gonna hedge out all my risk, basically, right? Do you know what I mean? So the idea being is, I just think the asset has got loads of movement potential, and I'm trying to harvest P&L out of the movement. If that movement happens to be brutally down, I'm okay with that.
It's okay.
Right?
Correct.
I prefer it to be up because I like the kind of growth that we're seeing in the space. And I think in general, we're going to get more growth and we're going to get more activity, and it's just going to be a better feeling if things are rising over time. But if we go through a 50 to 80% drawdown in crypto, I'm going to be planning to profit off that, right?
Yes, exactly. I mean, in the scenario of quantum, I mean, there's going to be all sorts of other risks in terms of like counterparty risk and all that. So even if things are going down 80%, I mean, who knows whether that money means anything, right? Whether you can get access to it, right? But for sure, like if there is volatility and there is trends, you want to be involved. Crypto was the best market in the world for the last 5 years.
For both those.
Exactly, right? Yeah. They provided so much volatility and trends, right? And
although precious metals are having a go at catching up.
This is it, right? Yeah. Precious metals, now you got space stocks, you had AI stocks, you're getting, uranium stocks now, nuclear power. You got
which is why you want to have your eyes on everything. You don't want to just silo yourself, right?
No.
But the mention of AI, we have to bring this up. You're telling me a story that I was fascinated by before. And about the intersection of AI and crypto, right? So tell us a little bit about these bots that basically started trading crypto by themselves. Because you were into this story, right? A lot.
Yeah, I mean, being in Dubai and being in this sort of environment, you meet other traders who are doing all sorts of different things, and you got a bunch of guys that are absolutely crushing it every day on meme coins, right? You've got meme coins launching, going up to $50 million, $100 million,
which I've stayed well away from. Right?
And I tried to, obviously,
because I don't see the point, and I just don't get it, and I don't have the time to put my attention on it.
Well, this is it, right? Like you've got to choose your battles, right? If we were talking about volatility and trends, meme coins had that in spades, but in the most compressed timeline.
Well, like 2 days.
Exactly. You can think of it effectively like 2-day options, right? You were funny. Punting 2-day, 5-day options on anything that had potential to
so it could either go at 0 or it could go up like 100x.
Yeah, I mean 0 being basically
it wipes out
below $100,000 market cap, right? It completely like the developer rugs you, i.e. he just takes all the tokens or it creates infinite supply and then sells the rest.
Yeah, so it's this exposure to being rugged I have a real problem with.
Oh yeah, I mean so does everyone, but that was where the asymmetry was. So if you wanted to be involved in meme coins, it was about position sizing, right? Mess around with maybe 5% of your portfolio and maybe dabble 5 bips of your portfolio per trade on these memes, right? Okay. Because they might 100x or whatever. Yeah. People were doing it with 30, 40, 50% of their portfolio.
100x on 5 bips would make you like 5%, right?
Yeah, exactly.
Which is healthy.
Yeah,
right?
I mean, there were people that made millions, right? Millions every day, right? That would do this.
Yeah.
But there was 99% that would lose everything, right?
Yeah,
that they would invest in. And people were doing that with a significant chunk of their portfolio. But just to give you an idea of these memes, right? Like you had things like Mudeng, right? Which was a random photo of a hippo that became viral in Asia. And someone decided that I'm going to launch a Mudeng meme coin. And this thing traded up to $2 billion valuation. Then there was a squirrel that got shot dead in America, and Trump talked about it. It was Peanut the squirrel, right? And this thing went from someone created the token on pump.fun, and it traded up to $1 billion valuation, right? Like in days. So people are making millions and millions of dollars on these things because they got to a trend really, really early and launched a coin.
But the thing I struggle with, right, is that we can give our attention to a YouTube video by watching it, by giving some of our time, watching it with our eyes, thinking about it with our brain. And that's one way of giving something attention, right? Mm-hmm. Like a meme, exactly. A meme, we can share it on Instagram and we're giving it attention, okay? But the way these meme coins explode in value is because people are willing to give their attention in the form of money. Like an actual crypto wallet is putting monetary value. That's their way of giving attention. So that bridge that someone has to leap across from giving attention to giving monetary attention, like what makes people want to do that? Like why? Because I've never really felt the need to do it. But like what is it that drives
whatever
that?
Is incredibly ridiculous and funny, right? That's what creates value. Now, by the way, all these tokens, if a token goes up to $1 billion, it doesn't mean that there's $1 billion of value that's gone in to this token, this contract to pump it, it's probably 50 million, $20 million, right? It's all paper wealth that's being generated because of the illiquidity of the order book that's got lifted to these types of values. If someone then wanted to realize their unrealized profit at $1 billion valuation, this token would trade down to $50 million. So it's all paper wealth that gets generated in these things.
Yeah.
Which is why.
But what makes someone put actual real money on it?
It's purely.
It's just gambling.
A bet on whether this thing is going to become really funny, right? Like, say, for example, Peanut was really funny because it traded at $1 billion valuation. It wasn't funny before, just because Trump talked about it and, you know, made a joke.
It's almost like the more it's worth is the funnier
Correct.
it is.
Yeah, it's
which
like
is stupid.
Veblen good, right? Like, in a way, right? Like, so the more that they can pump it higher. So then that's where it became, that's where this whole meme coin game became really shady. Is people then just tried to manipulate these markets higher so that they could get a bunch of people chucking in money, and that's where their liquidity
And
was to get out.
the suckers who are doing that are getting screwed.
Exactly, right?
Yeah.
So that's why they...
And that's what kept me away. I don't want to be that sucker.
Yeah,
right?
so the game was to get a token from 0 to 1 million, then 1 million to 10 million. After you get to 10 million, you can then start getting exchanges to look at you and launch and list your token onto an exchange. Once you get the listing on an exchange, that's typically the top where all the retail comes in, and that's where the early buyers get the liquidity to get out, right? So it's all basically...
And like even like Trump and Melania were launching meme coins, which I found absolutely ridiculous.
Yeah, of course it was.
Right?
That was the forever top in memes, right?
Yeah, it was. It was. You're right.
It's done now, right?
But tell us about the AI.
Yeah,
thing.
sure. So I saw all of these things happening. So
And this
was in October 24.
24. Yeah. Before Trump got elected, basically.
Correct.
Yeah,
Before Trump. So there was this AI researcher that had spent months having two versions of Claude Opus 3, I believe, talk to each other, just constantly having a conversation, right? And whatever this conversation started getting interesting. So what this AI researcher did was got the transcript of these conversations
between two AIs. Yeah.
Right. Trained a model on this, another model, and then gave it its own Twitter account, and so they could start shit posting, right, on this Twitter account, right?
What do you mean?
So basically, this this AI model, whatever it said, got replicated on its own Twitter profile.
Okay.
So it could run a Twitter.
But when you say shit posting, like, what was it
Just
posting?
All sorts, right? Like religion, what my identity is, interacting with other people from around the world who are commenting on these posts and talking to them, all sorts, right? So it's like a living thing, right?
Wow. Okay.
And so Mark Andreessen, A16Z, got interested into it and sent $50,000 to a wallet because it was trying to kind of...
Well, didn't he ask it what it wanted? Or
yeah, it asked, okay, what's my purpose? You know, I want to make this goat say gospel religion a real religion. How is it going to do that? Okay, well, maybe I'm going to launch a meme coin, right? Or I'm going to figure out a meme coin. So it's that sort of evolution of this Twitter page. So someone created the goat token, right? And this bot's profile figured out that this token got created, and so it started promoting it.
Okay, so the AI was never initially designed to create a meme coin or anything like that.
It just figured it out itself.
It just like found this thing and attached itself to that idea, basically.
Exactly. So
okay.
this meme coin, this bot was talking about all sorts of weird ideas of the world, right? And fetishes, philosophical things, and it came across a really disturbing image called the Goat Say Gospel, right? And really attached itself to this religion and ideology, right? And started creating things, right?
Okay.
And so people found that funny, obviously, right?
It is quite amusing.
It is quite amusing, right?
Yeah.
So someone...
It's quite weird, but
exactly. So someone created a token, launched it, and then gifted some of that supply of that token to this AI bot's crypto wallet. And so therefore it had its own skin in the game and self-incentive to, encourage it. Now this token went from basically zero to $500 million in value over a weekend. And it started really getting excited about it. And during that whole time, I was quite aware that the crypto world was really trying to figure out how to combine AI with crypto. So there was tokens like Render, there was Tau, BitTensor, there was all these kind of infrastructure, real tokens, but no one made money on those. Everyone was making money on memes. Now, this GOAT token was the perfect intersection of memes and AI. Right?
Because an AI attached itself to it.
Had attached itself to it that was like let free on the internet, right?
Okay.
So then the next token it literally talked about was, I think Fartcoin would be an amazing name for a token. It said this, right?
And that idea was originated by the AI.
Correct. This AI, right? On Sunday.
It's so funny because I thought a human came up with that.
No. So someone created a contract of Fartcoin, launched it, and
So a person launched Fartcoin, but the idea came from the AI.
Yeah, because you can launch any token from pump.fun, right?
Okay.
So the idea came from the AI. So it launched it. I fortunately bought some on that day.
On what day?
On the day that it launched, Fartcoin, right? Because,
wow.
Because I had people,
Again, you were prepared.
I was prepared, right? I had some money.
Your preparation seems to have made you a lot of money.
Yeah, it was. I had money on my Solana wallet, right?
Yeah.
Some before this, but actually I did get involved in memes. I got involved in serious memes because Coinbase launched them. Right?
Okay, serious memes. By that you mean memes that had already captured a lot of attention.
Memes that were only available on the Base network, which is run by Coinbase.
Yeah.
Right.
Okay. So that's almost like a filter system for you.
Correct.
There's enough attention on this that it's serious, but it's no meme is serious.
I mean, there's enough attention on this that there is an incentive for Coinbase to list it on their platform.
Okay.
Right.
Yeah.
So I had to have money move from one wallet onto the Base network, so that when there were opportunities there, I could invest into them, right?
Okay.
Opportunities like investing in Miggles, right? Like some random tokens, right? Like some stupid tokens, but basically preparedness really helped.
So then you got into...
So I got into Fartcoin at, $5 million valuation.
Oh my gosh.
Ran it to $100 million valuation, sold it all, then tried to buy it back at 20 million, and I did. And then capitulated when it went down to 10 million then. And then that was the last time I had Fartcoin. And obviously I'd kill myself a lot over Fartcoin because it went to 1.5 billion dollars, right?
Right.
And that would have been a lot of money. But these are the types of things that happen all the time. So after that period happened, there was so much AI meme.
How do you manage the FOMO? Because I haven't even been in the space to get any of that FOMO, right? Because I just kind of shy away from it, right? I think I've just got a conservative nature. But like when you've been in that space and you've seen those kind of returns, like how do you manage the FOMO?
It's worse. Because to be in this space in the first place, you have to be surrounded by some degenerates. And I was, right? I had some friends that were highly degenerate, right?
And let's define degenerate for people, right? Like just
degenerate
don't care about risk, basically.
But not having an idea of what that means, right? Like you're talking about people who are playing with 80 to 90% of their net worth, right?
Okay, that is definitely degenerate,
right? And also, chucking a good portion of that into these types of memes.
But they're just so degenerate gamblers, basically, right? Who are just like not controlling their risk at all and just saying, I want to go all in on this thing and it's going to make me a fortune if it works, and if it doesn't, so be it.
Well, these were successful guys as well, right?
So they could afford to lose the money.
They could afford to lose the money. No, well, I'm talking about successful guys still doing it with 80% of
yeah, but that makes no sense.
Yeah, so successful in that because they had a very good process. And they had a very good network. So some of these guys, right? They're so well informed by a lot of these things, right?
Okay.
And they understand how meta works, right? So crypto goes through all of these different processes where a new meta comes about, and they have to learn how to operate in this new meta.
What does that mean?
Which basically means, okay, what are the tools available to spot interesting launches that are, connected with an interesting founder? So that requires a network, that requires sniping tools, that requires, I forgot, it's called Periscope, I think it was, where you could identify very interesting new launches.
Interesting. So there's a process.
There's a process to it.
It's not like you're just investing in whatever sounds funny. Because at first you made it sound like the success of the meme, it depends how funny it is, but it sounds like there's a little bit more to it than that, right? In terms of whether it's going to be a successful launch.
Yeah. I mean, there's a lot of work that goes on behind the scenes for a meme to get to a certain valuation.
Right.
It requires like highly sophisticated marketing along the way.
Marketing, I suppose, yeah, because without marketing, how do you get attention?
Exactly.
So then it's about understanding which marketing strategy is going to work and which one isn't.
And which whales do you have to buy in to push your price higher so that it becomes a self-fulfilling prophecy.
So it's like the KPIs are very different to like what we're used to seeing in the investment world.
Yeah.
But it's got its own set of KPIs that will define the success or failure of a meme, basically.
Yeah.
Okay, so then the smart people who put silly money on it actually are analysing some sort of metrics to make that decision.
Yeah.
Okay, that makes it a bit less degenerate, though.
Yeah. I mean, like, so Goat was a very valid token for institutions to invest in because it was the intersection. There were institutions piling into Goat and Fiatcoin, right? Early
institutions,
like what? Institutions being funds.
Yeah.
Like hedge funds.
Yeah.
Right?
Do you think they were telling their investors they were doing that?
Yeah,
they were. Okay.
Yeah, because there was a ton of people that were hoping that they had invested into things like AI16Z, right? Which was a token that went up to $2.5 billion valuation. There was, my God, there was so much random crap, right?
Yeah.
And all of it went down 99% in about 3 months, by the way. Goat's trading at $10 million market cap now. Fiatcoin is the only survivor of that whole episode, right?
Wow, I'm surprised it survived, to be honest.
Out of hundreds of tokens, right?
Yeah.
So you get all of these flavors. Now, if I'll be honest, I probably made 2% to 5% of my kind of pot in my last 2 years from that episode.
Okay, so you kept it small.
I had a decent chunk in there at some point. I mean,
but you gave a lot back.
I gave a lot back.
Yeah.
Volatile because that was the thing to be involved in if you were in crypto. So you were involved. But you find these types of periods. Either you have to be very lucky in that period to crush, these types of environments. You have to be in the right place at the right time, size it appropriately for it to mean something. Otherwise, it's just a pure waste of time, right?
I mean, we've talked a lot about memes, but I find it very entertaining, the story, to be honest. But talk a little bit to me about, like, you talked about this concept of financial nihilism, right? Where there's almost like people are being forced out the risk curve because they're like saying, I've got no hope if I don't, basically. This is something Raoul Pals talked about as well. I mean, he went on Diary of CEO and was talking to Stephen Bartlett about it, right? And saying that crypto is kind of giving people hope in a world where that hope's been taken away from the inequality that we've seen by endless money printing and government deficits and stuff. Talk a bit about that.
I mean, crypto has the ability of, having these types of tokens go up thousands of % over a weekend. They're effectively lottery tickets, right? But lottery tickets that have better odds of you succeeding, i.e. there is some level of a process that you can apply to it to do well with, right? Now, the reason why meme coins and these types of things...
Or just crypto in general, right?
Or crypto in general, has done so well at capturing is the ability to get rich quick, right? And if you think about people in this day and age, what the opportunities are, the cost of living, the ability to get jobs, to deal with AI, to then deal with robotics, to deal with all these types of ideas. Yeah,
there's a lot of scary things out there.
Correct. And there's the idea of ever being free financially, to, retire, to do any of this stuff, to do what you actually want to do is a pipe dream, right? It's not going to happen if you're, working your £500,000 a year job or,
500, most people are like less than
That's
100.
what I mean, right?
Yeah.
Even if you're earning 500 grand a year, as a family of four, you take home 250K, you're living in a nice house. By the end of it, you're probably saving 20, 30, 40, 50 grand. I don't know, right? But how do you make it, right? From that, right? People rely on their pensions. Who knows if the pension is going to be solvent in 20 years, if the government's going to pay you, given how much they're spending now, right? You got all of these different challenges ahead of you. So some people say, go and become an entrepreneur, right? Go and learn.
I'm trying.
Exactly. Go and learn a skill, right? Have an unlimited upside. But most people don't have the ability to be entrepreneurs, and that's completely fine as well, right? You know, it's quite difficult, and a lot of entrepreneurs do end up failing, right?
100%.
Majority of them,
Yeah.
right?
Yeah,
So
yeah.
effectively, entrepreneurship is another type of lottery ticket that you do, but with the added expense of time and money and effort, with very limited payoff at the end, right? To show for it. So then people think, fuck it, why not just gamble, right? But do it in an educated way that's socially acceptable, which is trading, right?
Yeah, but it's the opposite of like what our parents taught us, right? Like
Yeah.
we're like second generation Asians coming into the UK, and it's like, you know, my dad was always like, make sure you save a certain amount of your income so you have something to fall back on and all these things. And it's like anyone who did that in the last 20 years got roasted.
Yeah,
like their money went nowhere, cost of living went sky high, asset prices went to the moon. It's like,
Correct.
why did I save this money?
Yeah.
Right? It's like the government is almost forcing you to be more irresponsible because they've been irresponsible.
Exactly.
Right?
Exactly. And they were also a product of their own sort of upbringing. It was a totally different world then, right? It was, our parents didn't have any other place to park their money on. They had one place, which was purely property.
They didn't have Fartcoin, that's for sure.
They didn't have Fartcoin. They had properties that were much more affordable, right?
Yeah.
For them, right?
It's true. Their crypto has been the property market.
Of course it is. It's been 10x, right?
That's true.
And it's on leverage as well. Most people don't appreciate that.
That's
they were
very
highly
true.
leveraged, right?
That's very true.
They put 20% deposit down on a
It just didn't feel like leverage.
50, yeah, because the government backstopped it.
Yeah,
right?
yeah.
It was a easy trade, right? Privatization happening in the 80s, right? You know, it was an easy trade that the government was backing. That was a trend. Peak of interest rates down only from there, right? So you had all of these kind of ideas. Now you have huge governments, taxes only going up, right? You have all of these kind of hurdles against you. And you've got the biggest challenge in the next 5 years is AI, right? The amount, I mean, I use AI regularly, daily. The amount of coding that I can do with it is unreal, right?
Yeah.
And you really need to be a first-hand user of these tools to really appreciate what everyone else has been telling you on podcasts about how it's going to take over.
You
Because
certainly got it. You got to experiment. And the
do.
beauty is you don't even have to be a coder.
No.
Right? There's all these tools that allow you to create code just from speaking to the AI.
Exactly.
Right?
Like,
But,
learn, you know, about yourself a bit, you know, journal with it, you know, do all these types of ideas, think better, you know, how to.
a lot of people I talk to who are concerned about AI not having enough safeguards, and they say that, you know, like there's been people who have like, you know, let's just say hurt themselves after conversations with AI, right? But my take's a bit different. It's like it's a tool, right? And a lot of tools can be unsafe if used unwisely. So, like, for example, a knife and fork, right? Yeah. We all use a knife and fork to eat our meals most of the time, right? Now, it's clear that if you use the fork the wrong way, right, you're going to hurt yourself.
Correct.
Right? Or the knife. But, you know, we as adults have to have a certain amount of responsibility for ourselves that we're going to use the tool in the right way.
Exactly.
Right? So I feel like that argument breaks down a little bit.
It totally breaks down.
Yes, those companies who are creating these tools could put a bit more of a safeguard, and that would be good and that would be beneficial. That I'm not against it. But as people who are using these tools, we are responsible for using them safely for ourselves as well, I think, right? And anyway, that's a little bit of me going off on a tangent, right?
No, it's true, because like there's, you know, people talk about AI slop, right? Or AI hallucination.
Yeah.
But think about how many times you speak to an educated person in their field and how much hallucination they do when they're talking to you.
Yeah,
right?
yeah.
Every human being hallucinates.
So we're like judging the AI on a different standard to what we're judging ourselves.
Correct. And we're not we're not appreciating how much incredible value it has, and we're only looking at the negative that AI has. The AI has unbelievable amount of positive in all sorts of areas, right?
Yeah.
But, you know, like we got into this conversation based on like, you know, the challenges that we're facing because we're coming up with a technology that can do your job better than 10 of yous put together, right?
Yeah.
So what do you do in this type of environment? What does money actually mean? Right?
Another thing Raul talks
You know,
about.
like, you know, me transacting money with you is an exchange of value. What value are you going to bring to me if I can have something that's costing me pennies that you were charging me 10 grand to do? Like, my wife's a lawyer, right? It's a regular conversation I try and have with her is that, you know, you need to start thinking out the box of, you know, how you're going to deal with a world where all these laws can be, all these contracts can be drafted for pennies, right? So when you have this and you're looking after your family, you're thinking about all of these types of ideas, and you're seeing people, social media is such a big amplifier of what everyone else is doing better than you are, right?
Yeah.
And you're seeing there that people are making millions trading crypto or trading or doing XYZ, or, you know, and naturally start thinking, okay, well, I can do that, right? I've got $1,000. I can chuck it into a meme coin. I can chuck it into this. So when you then think that, okay, this is the only way out for these guys, right? For 90% of the population, this is the only way out, is to gamble your way to riches. Now, like, prediction markets is the biggest thing in the world, right? Kalshi, Polymarket, you can bet on anything, right? On anything that anyone says. So there's going to be a whole host of problems on fixing there, right? But you know, like, say this, so I'll pay you X amount of money,
Right.
But yeah, it's all. There's a concept called long degeneracy. If you're long degeneracy, if you're long things like Robinhood, Coinbase, trading platforms, right, Polymarket, if you're long these ideas, you're going to make a ton of money. And I think that's
because the world is being pushed.
The world is being
to
pushed
be more
to bet,
risk loving, basically.
To bet. Exactly.
Yeah.
And how do you bet responsibly is the biggest thing that people need to understand.
Options. That's how you do it.
Options, for sure.
We haven't actually talked about options much. Do you use options?
I do.
Yeah.
I mean,
we did that trade back in the day in 2020.
Yeah, I mean, I've used options probably a handful of times in the last 3 years. I'd say 2 of them were very profitable, and 1 of them I messed it up.
And is it a long-term option?
Always been catalysts. So if there's a catalyst that I think that's underpriced,
okay,
I'll use options.
Okay.
So on both the Bitcoin ETF and the Ethereum ETF, you know, so Bitcoin ETF launched.
That worked, right?
The announcement launched. It completely retraced. I bought some Bitcoin call options, right?
After the retrace.
After the retrace, right?
Okay.
Ethereum, everyone was just completely underpricing the opportunity that Ethereum was going to get an ETF, if you remember, in April 24. And there was a date that the SEC needed to make a decision by. And Ethereum call options were like 50 vol, 40 vol. We just come off a massive correction in March 24.
Everyone had thrown in the towel.
Ethereum was 2,900, which is where it's at right now. So I bought 3,200 calls, spent...
How long dated?
2 weeks.
Oh, so it's very short dated.
Yeah, spent...
Oh, because you had a specific date in mind that the decision would occur.
Exactly.
Okay, so that's how you like to play them.
Yeah, if I have a date...
Do you ever sell options?
No.
You don't? Okay.
I mean, I've considered it every now and then, but I'm just like, nope, I'm not going to do that. I should. Because
I mean, as a vol trader, it does tend to work more than buying them, but you've obviously, if you get it wrong, you can get hurt quite badly. So you've got to be very careful in the way you sell options, I would say. Yeah,
I mean, I definitely need to adapt my style because the market's adapting so quickly.
Before I let you go, because the conversation's getting, I think we're nearly 90 minutes through.
Are we?
But I know. But it's been a great conversation. But like, you know, what is your kind of outlook for crypto going into 2026, right? We're starting a new year. We've had a load of institutional adoption, clearly. We had the whole DAT craze where these companies were trading at stupid MNAVs and they've all got caned basically down to, you know, net asset value or even at a discount. And Bitcoin, which hit 126K, is back to like sub 90. We're down on the year.
Yeah.
Like, what's your outlook going into the next year? And how did this year kind of surprise you?
So, I mean, this year, if I talk about just this year in general,
25.
yeah, 2025. I'd say our expectations were Bitcoin 200k plus, right? At the beginning of the year.
Yeah, I think we all
I
thought
think everyone was
the
bullish.
stars were aligned for a proper run.
Trump
right?
coming into power.
Yeah.
I mean, the whole market has completely changed at the end of it, right?
Yeah.
There's a number of reasons I'd say why, and I think one of them is the huge institutional adoption of crypto in general, and a lot of the kind of speculative side of crypto, falling away, and there's been other alternative asset classes that provided the kind of crypto-like returns.
Like
right?
memes.
Like like memes before, but
Yeah.
now it's in equities, right? At the moment,
AI stocks.
AI, space stocks,
Quantum stocks.
quantum stocks,
Yeah,
exactly.
okay.
You've had these parabolic moves and actually highly trending moves.
Okay.
Also, the crypto market at the moment has just lost a lot of market makers' sort of appetite, right? You see prices just not trading organically, right? Like it's quite jumpy, it seems quite illiquid, and there's been a lot of pain that happened in October the 10th, right? With after the huge sort of liquidation the largest liquidation that you had, where some tokens went down 90%. Atom went to 1 cent, right? Atom's a huge.
Right.
I mean, it's been around for a while, but basically you've had all of these kind of events which have left the crypto market in kind of a sort of interesting place, right?
Licking its wounds kind of thing.
Yeah, licking its wounds, figuring out its new direction, right? Whether the four-year cycle is real or not, whether it's become a 5-year cycle, like Raoul says, right?
What do you think on that?
I don't know. I don't have a view.
You don't have a view?
I don't actually have a view.
Okay.
Right? I'm playing it 1 month at a time. I'm basically thinking right now that I do want to be somewhat long into the new year. And only on the majors, right? Like Bitcoin, Ethereum. There's a potential catalyst, a little bit of alpha for you guys. There's a potential catalyst coming out in the middle of January for Ethereum, related to BitMine Technologies, Tom Lee's digital asset treasury vehicle, which
Well, I mean, I would argue they were the main reason for the massive run from 2,800 to 4,400.
Exactly.
Right? So if they get into buying mode again in the new year, then what do you think is going to happen?
Exactly. Right? And when the market's so illiquid, it's exactly their interest for.
That's where they can pump it.
Exactly. And they've got $1 billion.
Yeah, but it's not a healthy rally then, is it? If they pump it back to 5,000, that's a sell.
But
right?
it's going to go up. So maybe there's potential for making money. Right?
Yeah,
which is what we
100%,
right?
100%. But I'm just saying it's not a healthy reason for it to rally, but it's like it's almost like a telegraph flow that might be coming to the street, and you're like, well, there's not a lot of depth on the offer. We've seen that before when they come and buy. But how many billion did they buy relative to how many billion they might buy this time?
I can't remember exactly, but I do know that they are just under 4% of total Ethereum market cap.
Okay.
So they bought a significant chunk.
Yeah.
And they've got
and if they're buying, there's going to be other people front running. There's going to be people buying. Right?
So we've seen the game play out once before, and if there's opportunities to play.
And Vol's not overly expensive these days.
Exactly.
It's been coming as it does. It tends to come down seasonally into Christmas. So maybe a good opportunity there, guys. Pay attention.
Yeah, exactly. But otherwise, I don't have much of a view coming into the new year, unfortunately. I've been pretty quiet, enjoying my Christmas over here.
But I mean, not being too long has definitely saved you some money, right?
Yes.
This year.
Yeah.
Right?
I've been fortunate.
Yeah. So it's more about kind of respond to the market as it shows its hand.
Yeah.
But right now it's kind of a bit guarded right now, the market, right?
I mean, just to give you an idea, I don't know what it is. I've just had the touch to just step away from the market at all the right times in the last 2 years, basically between, say, after Ethereum's launch, May to July, I was completely off last year. This year, between January to April, I was totally off. And then from July, I've literally hardly traded, right? So I've managed to figure out, and I think that's a function of being heavily involved, but also loosely as well, right? So like really going for it, to seeing if there is like sort of appetite for a market to trend, to have that kind of gut feeling, and then licking your wounds a little bit, taking a few hits, and then reassessing, letting yourself,
So I feel like, it sounds like you've got your ear enough to the ground that when momentum, not just of price, but momentum of sentiment starts to snowball, you'll get a gauge for that. And then you'll come into the market and you might have missed the first 5-10%, but then you'll strap it on for the proper move, basically, right?
Yeah.
So because you've got the confidence that you can see the setup quite clearly, that incentivizes you to go in bigger. So you don't need to catch the start of the move, right?
Most of the time, I've missed the initial move.
Yeah, that's interesting.
And I've caught sort of the 60-70% of that bulk of the move, but in size, right? And risk managed and pushed it, right? It's happened beginning of the bull run. I missed a lot of the Bitcoin move after, getting a few call options on it. But the majority of the P&L I made was from buying Bitcoin miners, right? Like CleanSpark and Mara,
right.
And, with the digital asset stuff over this year, I missed the Bitcoin move from, 110 to 125K. But Ethereum just had BitMine Technologies announcing that they're going to do a huge buyback. So I strapped it on Ethereum, right? And,
right.
And rode that pretty well.
Nice.
But catalyst trades have been the way, and I think that will continue to be the way going forwards. The idea of buying and holding and literally relaxing for a nice smooth ride higher, I think those days.
So the HODL mentality is struggling a bit, right? Yeah.
I think they're on life support.
Nice.
Yeah.
And then before we wrap up, congratulations, you've got another nipper on the way.
Yep.
How have you found balancing fatherhood and trading? Because trading can be quite a full-on intense day job, right? Have you struggled with that at all, or have you?
Well, one of the benefits of being in Dubai is you get a full-time nanny.
Okay. Right.
And they're not that expensive. So we're very fortunate to have a lovely nanny who looks after my little one for majority of the day. And then whenever I when I have a moment to go for a hug or a play, I can pop downstairs.
So get help, basically.
Yeah, exactly.
Okay.
Or if I want to scream into a pillow, can do that as well, It's fine. Or kick a sofa, which I did, and I still can't walk properly. But yeah, we all have our ups and downs, right, with the markets. But it's been great. At the end of the day, you try and think to yourself why you're doing all of this. And for me, that purpose has really come down to, seeing the child regularly. Having the time, the balance to do that, to be spending time with my wife and kid. And
it's worth a lot.
It's worth a lot, right? And that's what this lifestyle gives you.
Mate, appreciate you coming on the show.
Absolute pleasure.
It's been a great conversation. We covered a lot of bases.
Yeah, I hope your audience finds it useful.
Yeah. Well, that's our first episode, guys, of 2026. Remember to like and subscribe, and we'll be back here in a couple of weeks. See you then.
Cheers.